Hi, everybody. Welcome back to another edition of VCTV with your host, Kyle Ellicott. We've got a fun episode for you talking about one of our favorite topics, that is blockchain. But more importantly, today we're going to go a few levels deeper. We're going to talk about the financial side of what's happening with blockchain. When that means decentralized finance or DeFi. We're going to talk maybe a little bit about the stablecoin environment as well, talk a little bit about digital assets and mining, but also talk about decentralized finance as a whole. And I'm joined with an outstanding guest, co-host today as well, who I'll introduce in just a moment. But a big thank you to the Token team, to Maria and Hasmik for making today's episode possible. With that, Alex, welcome to the show. It's a pleasure as always. A little intro, a little background for those who may not know you.
Hey Kyle, good to be back. Sure, I'm a serial entrepreneur. Done 8 startups as a founder, 3 unicorns, including Celsius Network, where I'm currently the CEO and the co-founder. We focus on 2 simple things. We created this whole idea that you can earn yield on your crypto. So the first killer app was store of value, Bitcoin, Ethereum. The second killer app is yield. And Celsius paid more yield than anybody else for longer than anyone else. Over $700 million in interest paid to almost 1 million customers. We have 42 different assets. So you can deposit Bitcoin on Bitcoin or Ethereum or Litecoin or BNB or any of your favorites. And the second piece we do is we basically allow you to take a dollar loan. So instead of selling your coins, paying taxes, you can basically take a loan against your coins and keep more Bitcoin, keep more Ethereum. And you can spend those dollars on paying off your credit cards, buying a car, whatever you need, right? So those are the 2 basic services. And we operate about 170 countries worldwide. I'm based here in New York City. And that's a quick one on me.
I love it. Well, welcome back to the show. And we're going to talk and dive into a few of those areas that you've been focused on at Celsius. And I want to get to a full Celsius update in just a little bit, but I know we've got some important topics you and I were talking about pre-show as well. And, this is a big week for decentralized finance. We've got conversations around stable coins and the SEC. We had Chairman Powell come out with a few things, a few statements that I know you've commented on. And we also had a lot happening in the mining industry over the past couple of weeks, and more so last week as well. So let's kind of jump right in on the top there. I mean, Powell coming out and saying what he did about Bitcoin and it not being a form of payment per se sparked a lot of conversations. And I know you put out a great string of tweets earlier as well around this. Talk to us about why this is important, why does it matter, and why now?
Right. So when you go to a psychiatrist and you try to kind of do self-analysis, they tell you first you get ignored, then they laugh at you, then they try to get rid of you, and eventually they take credit for what you did. Right. So we are at the they try to get rid of you phase because I think just the fact that Powell, it's not just the Fed, it's actually almost every central bank in the world is now either cracking down or throwing out players like Binance that they're not happy with, or changing the rules, or launching it themselves. Like in China, basically the central bank said, we're just going to create our own. We don't need all these other things. Let's get rid of all the stable coins, all the crypto, and launch our own version of this thing. So I think we're at this phase where central banks are finally taking crypto seriously. Banks are starting to take stable coins and other things seriously. You see Visa partnering with Circle for USDC. You're seeing every major bank either accept or start transacting Bitcoin. So all these things are very, very important steps, and in the mass adoption. And really, it's a 3-horse race here, right? You have, again, the government version, like the Chinese digital yuan. You have the corporate version, like JP Morgan or Facebook or others who are trying to create, take advantage of their mass of users to give them their own version of ice cream. And you have the general adoption, right? You have the open ledger, the public internet version, that is what we all use and we all believe in. But it's not given, it's not automatic that the public version, the Bitcoin version, is going to win. We the people, have to vote for it with our pockets, with our wallets, with our credit cards, right, with our assets, for it to be successful and to become the global standard.
And that's a good point, because the conversation continues to further go down those rabbit holes of, you know, which will be the winner, which will work out. And with central bank digital currencies, I mean, we also had the white paper released over the weekend, or I think late last week, from China, with the digital yuan and what that would look like and how it would be applied. You know, we've seen tons of discussions from other countries, as you mentioned, but we also have this conversation beginning today, early this week, and into tomorrow with the SEC around stablecoins, the risk, the reward, the opportunity, and what that means for the US, and what that would look like if a central bank digital currency was put into the United States, and how a stablecoin may play a role into that. Any thoughts as to why now, why this is so important for people to be paying attention to? And we also, just as another side note for our audience, we also had a white paper released on that same topic as well, and what this would look like. So Alex, your thoughts on this?
Yeah, so I think you're starting to see cracks in the wall, in the dam, because countries like El Salvador, who don't have their own currency, right? They have to make a choice. They are pegged to the US dollar. Their legal currency is US dollar. Basically added a second legal currency, second legal tender, being Bitcoin, right? So that is a crack in the wall. That is the Fed looking and saying, how is this possible? This central bank, who used to be my slave, used to be basically an extension of me, is betraying me and is now willing to take my something else that is not the US dollar, right? So I think part of the reasons why they have to do something is because it's trying to see this migration. And I think there's going to be a huge opportunity to basically to side either with the CBDCs or to side with the open markets. Meaning, in the United States, we normally let industry be the front, the leader, right? So we're gonna allow companies like Paxos and Circle, Coinbase, and so on issue and manage stable coins. Or are we going to let the Fed basically create its own currency, bypass all the banks, and go and work directly with you as an individual? Because when the central bank issues a CBDC, like in China, they deposit it directly into the customer's account. You don't need a bank account in the middle, right? You have a direct relationship with God, right? God, who prints all money. And so we really are testing the two systems. And in the United States, we're testing, are we going to go with the public version with the basically open standards stable coins, or are we going to allow the central bank to issue its own version and effectively call or eliminate competition from industry? So that's what the debate is today. The conversation is today. All the agencies today are meeting in Washington to discuss what is going to be their treatment of stablecoins, right? And obviously, the rest of the world is looking to the United States to see what they're going to do. A very important point is that stablecoins, unlike in China, where China is trying to get rid of dollar-denominated stablecoins, in the United States, Treasury, not the Fed, but Treasury actually likes the fact that there are many, many additional assets being denominated in US dollar, because that gives more velocity to the US dollar and it creates more use cases, right? And it basically increases the adoption of the US dollar as a global reserve currency. So actually, I think here Treasury and the Fed are not necessarily on the same side of the coin. Pun intended.
I was just about to comment on that. Good pun there. And with that, you also put out a fascinating tweet storm as well late yesterday around the migration of where money may be being placed right now in the digital asset space, right? From Bitcoin into some of these stable coins. And just to quote the tweet, I would love to hear your thoughts further on this as it relates to today's conversation around stable coins is, quote, while BTC has taken a 53% hit since its peak, the total USDC and USDT in circulation remains close to an all-time high at 26.7 billion and 62.3 billion respectively as well. What does this mean? I mean, seeing such an aggressive migration into stablecoins from the Bitcoin digital asset itself, what are your thoughts on this? Why is this important? What does this mean for general payments or use of digital currencies, and what does it mean just for maybe a store of value as well?
Sure. So a few things about that. So first, like you said, the balances on stablecoins are close to all-time highs. So we are not seeing any correction there. The opposite. There's more and more migration of dollars from the traditional finance into digital dollars on DeFi, right? So, and USDC, USDT, Paxos, and so on are all versions of that digital dollar that live on the blockchain. So that is very important because all that is effectively dry powder waiting to come into Ethereum or Bitcoin or Chainlink or whatever the favorite project is. Another reason for this increase is also that we used to have a very narrow lane, and most people who came from fiat world to crypto world landed on Bitcoin, right? They first bought Bitcoin and then they used Bitcoin to migrate into different assets. Now what's happening more and more is that we're building this 8-lane highway from traditional finance into DeFi, and the first stop there is a stablecoin. It's not Bitcoin, because you cannot really take a Bitcoin and use it on DeFi. So all the people who are looking for yield or chasing yield, for example, can take dollars, buy USDC, put it on Celsius, and earn 8.8% and wait to decide, okay, what am I doing? But while you're waiting, you're earning 8.8%. So the utility or the yield component is driving tremendous adoption and is increasing the total dry powder on the DeFi side. So all those things are very important, because when people are worried about where is Bitcoin going and how big is it going to be and so on, they have to remember that there is $100 billion worth of dry powder just sitting there, ready to go, ready to be used on a moment notice the minute all these people decide that the market is turning and is going higher.
And with that being said, we were talking a little bit pre-show about the current DeFi landscape and where things are or where things are not. I mean, do you think this leads to this resurgence for decentralized finance and maybe some of the assets and even some of the adoption that has maybe slowed a little bit? Do you see something big happening in the second half of the year? We are mid-year as well. So think of this as kind of that second half of the year prediction. Do you see this resurgence coming?
Yeah, so last year I had a perfect record. I on January of 2020, I predicted that Bitcoin would close the year at 30,000. And I think January, Bitcoin was in the low thousands, right? So everybody thought I was a little crazy. It closed the year at $29,640. I missed it by 4 hours. It actually hit 30,000 4 hours into the morning of the first. This year, I'm telling everybody it's going to close the year. It's going to go all the way up to 140 to 160,000. It's going to close the year below 100,000, but still 3x from where we are today. And the reason for that is that if you're tracking our retail wallets that have 0.01 to 1 Bitcoin, all of those are at all-time high, meaning that they're actually accelerating. The number of people being added has never been faster. So while we have some selling from Chinese miners and from flooding that's going on and so on, there's no slowdown in adoption. So yes, right now we're in a kind of a midst of an accumulation, but I see a resumption both on the DeFi side as well as on the price action of Bitcoin and Ethereum, and both of those are going to hit new all-time highs in 2021. So those are very important metrics, because I personally am buying Bitcoin, Ethereum every day or every other day just to average in. I don't know when it's going to take off. I don't know what's going to be the news that's going to let it take off. But I know that the sellers are going to basically finish selling their bags, and that's going to be when things are going to take off. So there's definitely going to be a resurgence. I mean, you can see the activity. You can see Celsius is a leading indicator. Celsius is a hodler community, almost 1 million hodlers who got together and earning yield on their assets. So we're seeing, like last week was one of our best weeks ever in dollar terms. $300 million in net assets, over 300 million added in 1 week to Celsius by the Celsius hodlers, which means they're doing exactly what I'm doing, right? They're averaging, they're buying additional assets. So when we look at the behavior of the community, that is just completely different than the price action that you're seeing on the exchanges. And the volume on exchanges is down 50%, right? So again, you shouldn't be watching the exchanges. You should be watching what the hodlers are doing, because long term, they are the ones who are dictating the price of Bitcoin. Short term, it's a speculator that is dictating the price of Bitcoin. Long term, the hodler is dictating it.
It's a good point. I want to bring out a key word you mentioned, mining, in that response. We've had a ton of conversation around mining over the past few months, mostly around energy usage. Last week, I talked a little bit about the migration into using nuclear power to do mining here in the United States, which is starting to get some traction throughout the Midwest and East Coast as well. But we also have this migration from China into many different countries around the world, where miners have decided to move and relocate for various reasons. But you yourself, what are your thoughts on mining? And I believe you have done some investment in mining as well from the Celsius side. Would love to hear your thoughts on mining, where things are going, but then also, why are you guys making a bigger bet on this?
Sure. So basically last year and in the beginning of this year, we've made over $200 million worth of investments in mining. For us, it's not like we knew that the crackdown in China is going to happen and we went all in on mining. For us, we create yield from institutions, exchanges, DeFi, retail lending, the loans we talked about before, and from mining. Mining for us is just one more form of yield creation. So instead of giving loans and charging interest, how about I build a Bitcoin factory that prints Bitcoin so I can pay my community Bitcoin, right? It's that simple, which is not the business of most miners. Most miners invest dollars, create Bitcoin, sell the Bitcoin, and pay in dollars, right? Or earn in dollars, right? So our community just wants Bitcoin. They don't want any dollars from us. So our investment was obviously extremely well timed. And now there's a huge shortage of both facilities and machines and everything else. And the mining difficulty has come down, meaning we're making 50% more Bitcoin than we projected, right? So we were ahead of our own projections. And all of that is good for the mining industry because you want diversification, you want decentralization of mining. Over 50% of miners were in China. Moving some of them to North America, moving some of them to other countries is a good thing for Bitcoin, right? You don't want the Chinese government or somebody else going and owning or cracking down on 56% of the total mining capacity. So our investment was all in North America. We are focused on renewable resources. So almost everything we did is either carbon neutral or completely green energy. We also joined Michael Saylor Bitcoin Mining Council and a few other organizations to basically make sure that we can influence and affect others to use the same best practices that we're doing. And all this stuff is great for Bitcoin, right? It secures the network and it delivers Bitcoin to our community. What could be better?
Agreed. And with that, I would love to hear, where are things today with Celsius? You dropped a few hits for us on some of the big numbers that you've had, but over the past year, you and I have talked a number of times around this, what the industry is doing, to what Celsius is doing, what you're doing. Catch us up here midway through 2021. Where is the company? Where are things with you guys? Where are you looking at going in the second half of the year? Give us that little bit of update, since it plays such an impactful role in the DeFi community, and furthermore on all the topics that we're talking about today.
Yeah, so like you said, we are a very large participant in DeFi. We have several $billion on the network. We're a lender and a borrower, right? Most DeFi participants are usually participating only from the lending side, meaning the providing assets to DeFi. But Celsius is also a large borrower, so we create demand for all of these people who are DeFi purists, who basically say, I'm never going to use Celsius. I can go straight to Aave. Well, who do you think is taking those Aave loans? So Celsius is as a very important participant, because sometimes we'll take a loan from DeFi and lend it out to an institution or lend it out to an exchange, or even give a retail loan. So all that completes a circle, completes a cycle, and enables these DeFi transactions to actually exist. I think for Celsius, we at the peak before this crash, we were at 22 billion in assets. We're now somewhere at the 17 billion range. Again, almost 1 million customers. We've paid more interest than anyone else. Continue to pay more interest than anyone else, and really super excited that there are all these people all over the world who effectively have a second source of income. Because their money suddenly earns yield, right? Their money earns money. Their stable coins earn yield. Their Bitcoin earns yield. Their Ethereum earns yield, and that kind of reduces the selling pressure also, because when you generate that yield, you have less of intent or less of stress about selling your assets, and you hodl even more. So for us, it's all about kind of pulling together our community, creating. Like for example, we have 115,000 Bitcoins from almost 1 million customers, and that's what we use to create yield on BTC. So that is a very, very important function that I think exists in traditional markets. We brought it into crypto. It's just that instead in traditional markets, your Fidelity, your Robinhood keep all that money to themselves. It's called SEC lending, and they keep all that money to themselves. Celsius decided to give the vast majority of that back to our community. So that is really what separates Celsius from everybody else. Again, we invented this practice, and now other people are jumping and say, okay, I'll do it too. Like Coinbase now started offering 4% on USDC, which is half of what Celsius pays. So without Celsius, I'm sure Coinbase would still be paying zero or almost zero on USDC. So I think we're setting a new high standard. We also launched proof of community. That's our way of basically open the kimono and showing everybody where are we generating yield, how much yield we're generating, showing you how much you earn, but you also get to see what everybody else earned. Imagine that, going to your bank, giving them that check that you got, your paycheck, and saying, okay, here's my money, but I want to know, what are you going to use it for? Who are you going to give loans to? How much you're earning on my money? And I want to see how much did I get and who else in the bank is getting the rest of this money, right? Obviously, no bank in the world will ever share that information for you, with you. But at Celsius and DeFi, that is the norm. That is the standard, full transparency. And that's what the future of finance looks like.
I love it. Well, with that being said, last question before we come to close here. If you had to place a bet anywhere as an investor in, blockchain, DeFi, NFTs, dApps, the like, wherever you may in the entire blockchain universe, where are you placing your bets for the next 6 to 12 months?
Yeah, so I'm excluding Cell Token. Obviously, I can't talk about that, but I'm sticking to the basics. So I would probably go a third with Bitcoin, a third with Ethereum, and a third in stable coins, kind of waiting, having a dry powder for opportunities. If there's a flash crash, if there's something else happening where you can basically use those dollars. Again, those dollars are earning yield, earning 8.8%. So even though fiat is being debased very quickly, you still need that as a currency to actually purchase more assets. So that will be my allocation.
All right. I love it. Well, with that being said, Alex, thank you so much for joining us today. A quick shout out. Where can everyone find you? Any closing thoughts that you have? And of course, where can everyone find Celsius to learn more and sign up?
Sure. Yes. You can download the app from Apple or Android. Our website is celsius.network. I have a weekly show every Friday at 1 o'clock, so you can watch that on YouTube Just search for Celsius Network, and my Twitter handle is @Mashinsky, my last name, Mashinsky.
Wonderful. Alex, thank you so very much again to you and to the entire Celsius team for joining us today as well. And to our audience, thank you so much for tuning in. If you like what you heard, make sure you click like, share, and subscribe to today's episode. Also reach out to Alex and myself along with the Celsius team, as we'd all love to hear from you. But do add context when you reach out, where you heard us, where you met us, and what you would like to continue the conversation about as well. And a big thank you to the Token team, to Maria and Hasmik for making today's episode possible. With that, Alex, have a wonderful day. To the audience, you as well, and we'll talk to you soon.
Thanks, Kyle, and thanks for having us back.
Thanks, everybody. Bye.